Brian Resney, president of Resney Wealth Management. I'm bringing an important update about the economy and the investment market so you can better your portfolio. We continue to see improving data sets, although this week we had a few just a little bit weaker than on the average trend indicators on the job market, unemployment numbers, and the initial claims. Now, while this isn't concerning to me, this is basically a 1 week event. We'll watch for the long-term trends in this to see if the job market, and in fact, continues to get maybe a little bit weaker. But generally speaking, the initial claims are only the initial claims for people who are going to unemployment. We see the job market continuing to improve at a slow pace, of course, as we've talked before. We continue to see the general equity markets in the last, now let's say week and a half or so, just be a little bit jumpy. Generally speaking, most of the equity markets are down between 2 and 4% or so in the last week and a half. Not an alarming number at all. And in fact, the long-term intermediate trend are still well intact. I believe as we see the year progress, you'll continue to see a little bit of light volatility from here and there. And we'll make adjustments to our global tactical portfolio based upon an actual strategy and when necessary. I think too many investors today watch all the different news programs maybe way too often, and they get emotionally distraught or nervous about what's happening in the world. And I've talked about this so many times in the past. What you hear on TV, one day it's hot, one day it's cold, the next day it's hot again. At the end of the day, that's not investing at all. Jumping from this to that doesn't make any money, in my opinion, and never has. You have to follow an investment strategy. You have to look at the intermediate and long-term trends. And right now we're seeing improvements across the board, not only here, but of course in the emerging market economies. Europe continues to come back into limelight. There's talks about Spain and Italy, and is there some problems there? And really, if you look at across the board, most of those areas are being contained, and they're addressing those problems. You're going to have short-term fluctuations always, but again, their problems seem to be handled, and they seem to be looking at what they need to do in order to avoid any kind of banking crisis overseas. I look forward to really, really positive net returns. I know we're only in the first quarter of 2012, but I think as we progress, I think there'll be a lot of shocked investors, as I've made this comment before also, how the year progresses. I think things will get better. Gas prices have seemed to stabilize a little bit. Oil prices are down in the last couple of weeks. Nobody likes to pay higher at the gas pump, but generally speaking, I think over the long-term trend, oil prices, gas prices will continue to slowly move up, and it's more of a supply and demand factor. So just kind of anticipate that in your budget. The world economy, and especially the emerging markets, which has essentially billions of people, are wanting the same types of things that America has had for years, which is cars. And as they get cars, scooters, and so forth, there will be more demand on not only gas but natural gas and other products of fossil fuels, and that will push prices ultimately higher. So just kind of realize that the days of $1.50 gas is probably never going to be here again. And that's just something we're going to have to contend with as a nation and as a world. I will make adjustments to our portfolio as necessary. I do see positives long-term throughout this year, and we will continue to do our job. If you have questions about your portfolio, if you have questions about the economy in general, or just want to talk to us about what we see out there, call the office. We always like talking to our clients, and have yourself an extremely profitable day.